Inflation is raging all across the world, especially in the United States. The Federal Reserve is aggressively raising interest rates to fight inflation. The jobs report from the Labor Department shows that the employment market is still strong. But we keep hearing of layoffs every week. So, what is really going on? What does this mean for inflation? What does this mean for interest rates? What does it mean for the US economy? And, what does it mean for the future of the United States? But, before we get into all of that, please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. As we all know by now, the United States is teetering on the brink of recession. And retailers are getting hit pretty hard. For months, retailers have had sales and markdowns while scrambling to offload excess inventory. So, enticing consumers to click on deals this holiday season will not be easy. Already, retailers have been struggling for months to move products. Most retailers miscalculated what consumers would want coming out of the pandemic. Not to mention, raging inflation has also been squeezing consumers' budgets. That is basically forcing retailers to cut prices further to get consumers to spend. And retailers are offering deals earlier and earlier in order to be competitive for the upcoming holiday season. That combination of negative forces is expected to soften consumer demand for the big holiday sales. This softening is now expected to extend even to online sales. As you know, consumers have been doing a lot of their holiday shopping online in recent years. The shape of the holiday season will look different this year, with early discounting in October pulling up spend that would have occurred around Cyber Week, said Patrick Brown, Vice President of Adobe Digital Insights. Adobe Digital Insights is a data analysis company that forecasts holiday sales based on transaction data from retailers. In 2022, online sales on Black Friday are expected to increase by only 1% from a year ago. Cyber Monday sales are expected to grow by 5.1%, according to Adobe Digital Insights. Still, overall, online spending for the entire holiday season is expected to increase by 2.5%. On the surface, that seems okay. But it is the smallest growth since Adobe began tracking the figure in 2015. Even still, Adobe warned of a possible decline in online holiday sales. Adobe forecast a possible range for sales of between down 2% and up 5%. The holiday shopping season got off to a pretty good and early start last year. At that time, shoppers were scrambling to secure gifts that they thought might be in short supply. If you recall, supply chain bottlenecks led to various shortages on a large number of products. This time around, retailers are offering the early deals for other reasons. Those reasons are to either to get rid of excess inventory or to compete for what might be a shrinking pool of consumer dollars. This continuous discounting effect could mean that spending will be spread out more this holiday season. This is first year since e-commerce came into its own, where things are a bit more unpredictable, said Taylor Schreiner, Senior Director of Adobe Digital Insights. Amazon has set its second Prime Day of 2022 Tuesday. This is the first year that Amazon has had two of the discount days in a single year. Other big retailers like Target and Walmart are getting started early as well. Walmart's online sales event, called Rollbacks and More, starts Monday and runs for 3 days. Walmart is focusing on special prices for electronics, toys, and clothing. Target is expanding its price match guarantee through Christmas Eve. The early deals could mean people are already stocked up on gifts and decorations by the time the holiday shopping season traditionally kicks off after Thanksgiving, according to Adobe. Only 20% of consumers are expected to shop on Black Friday this year. That is a decrease from 36% in 2019 and 2020. Adobe also expects more retail stores to stay closed on Thanksgiving Day this year. Both Walmart and Target have announced that their stores will be closed on Thanksgiving Day. The inflation that's hitting supermarket shelves isn't as stark online, according to Adobe. That's largely because fuel and grocery sales, Adobe continued. Gas and food, which have seen some of the biggest price hikes, are usually purchased in person, Adobe also noted. Nevertheless, raging inflation is still affecting online buying habits. During Amazon's Prime Day event in July, shoppers focused on necessities like dishwasher pods and diapers. That is instead of splurging on discretionary items such as Instant Pots and Roombas. Consumer belt tightening is expected to carry over into the holiday season. This year, consumers are very concerned about inflation and are expected to select less expensive gifts. Consumers will be looking for promotions this holiday season, and retailers should be looking to respond by having desirable gifts for the budget-conscious consumer, said Matt Kramer, head of KPMG Consumer and Retail Sector. Retailers will try to entice gift purchases this season with deep discounts, said Adobe. Especially in technology and toys, Adobe continued. Adobe expects discounts of 20% or more on technology and toys. These discounts will definitely get shoppers in the door. But the price cuts will weaken profits, probably at every stage in the supply chain. So, we are seeing this mixed economy. Inflation is raging, but layoffs are happening. Consumers are tightening their budgets. Gas and food prices are still high and maybe getting higher. But retailers are preparing to offer big discounts. Is the Federal Reserve actually causing deflation by raising interest rates while it says that it wants to fight inflation? ARK Fund's CEO Cathie Wood thinks that the Federal Reserve has actually crossed over the line by raising interest rates as far as it has. Wood thinks that the Federal Reserve is focusing on lagging indicators while the situation on the ground is changing quickly. Cathie Wood thinks that Federal Reserve Chairman Jerome Powell is making a huge mistake as he continues to raise interest rates. Inflation is quickly turning into deflation, Wood said. That means the Fed will likely have to pivot away from its interest rate hikes sooner than the market thinks, Wood continued. The Fed should be focusing on real-time developments in the economy that show signs of deflation, Wood added. In the pipeline, inflation is turning into deflation, Wood said. One of the best inflation gauges, the gold price peaked more than 2 years ago in August 2020 at $2,075 and has dropped 15%, added Wood. Lumber prices are down more than 60%. Copper is down 30%. And WTI crude oil is down 35%. Then the Fed could find itself in a scenario where it over-tightened monetary policy and needs to pivot to prevent the economy from entering a hard downturn, continued Wood. Wood would welcome an about-face by the Fed because she is a growth stock investor. Rising interest rates have cut the value of ARK Invest's flagship investment fund by a lot. The ARK Disruptive Innovation ETF fell 74% from its peak in February 2021. Some Wall Street analysts say that inflation is abating. But the U.S. labor market is still strong, and that also contributes to higher inflation. Since it started aggressively raising interest rates earlier this year, the Federal Reserve has promised to defeat inflation with a soft landing for the U.S. economy. In other words, they are trying to reduce inflation to 2% without sparking a recession. This comes even as the unemployment rate is ticking up and layoffs are sweeping the U.S. economy. That is the highest rate of inflation in 40 years. But, what do you think? Please leave us a comment below. We would love to hear from you. Please hit the like button. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.